What's up, guys? Welcome back to another video. Today we're going to talk about what time frames are best to use. First off, no fluff, no sidetracking. There is no best time frame to use. I use multiple time frames with equal importance, but I use multiple time frames for different reasons. Equal importance, different reasons. Let's break down why. So first off, I don't go under the 5. I don't go over the daily. So I use the 5, 15, 30-minute, hourly, 4-hour, and daily chart. And I'm going to show you my charts really quick just so you can understand why I do what I do and why I use what I use. So first, I have the daily chart. The reason I use the daily chart, guys, is because I want to know where the market is overall. I want to know the bigger picture. If I know the bigger picture, then there's a really, really solid chance that I can at least have start formulating some thoughts about what may happen next, right? So for example, right, you can see NQ's been in a very, very aggressive uptrend on the daily chart for pretty much the entire year, right? So we've been very bullish the entire year. Now, also in the daily chart, I have to note that, hey, we are actually pretty choppy though. Like despite us moving up, it has been a choppy move up. So the quality of the move hasn't been super solid. What this tells me is that, hey, Isaac, we've been moving up, but it's been a choppy move up. So although there is overall direction, the day-to-day direction may be inconsistent due to the choppiness, right? So I take that analysis from the daily chart and I'm able to move on. So next I'll go to the 4-hour, and this is when I really start finding my levels, right? This time frame is where I start finding my levels because again, because the daily chart is a daily chart, the lower you go on the time frames, the more information you will be able to see. And that's only because there's more candles available, right? For example, there are 3 5-minute candles and 1 15-minute candle. So on the 5-minute, you may be able to see a little bit more information than you would be able to see on the 15-minute, right? So that's one of the pros, right? To lower time frames. But the bigger time frames, because they have less candles and with that less information, usually when the 5-minute or the 15-minute they're very choppy, I can go up to like the 30-minute and the hourly and see a much clearer picture because there's less noise. So you can see why again, I use them equally, but they have equal importance, but they all have I have different reasonings as to why I use what I use. Also, as a technical analysis, as a price action trader, right? I'm a price action guy, buyers and sellers, supply and demand, trends, consistencies within the market. I can find those on multiple different time frames. The only difference between a setup I see on the 5-minute versus a setup I see on the 30-minute or the hourly is the amount of time it takes for that setup to actually formulate and the longevity or length of the trade, right? A 5-minute breakout may last 20 minutes, right? On the 5-minute chart. The same exact breakout on the hourly chart may last a few days, right? Because each candle is 1 hour. For example, right, as we go down to the 4-hour, like I said, we're gonna start looking at we're gonna start finding levels here. So as we're here, right, first thing I see, hey, like I said, we already know we're on an uptrend. Therefore, being a just somebody who likes to go with the flow of the market, if we're on an uptrend, I'm not gonna necessarily look or scour for short opportunities. I want to take what the market gives me at the end of the day, right? But we can see here we have, right, obviously have a level here, and you can see why, right? Rejection, support, and then we bounce here again once we broke the trend, right? Have another level right here, right? Probably have another level here as well. But one thing I want you to notice is I'm not doing too much, right? I don't want a bunch of stuff on my screen. The only reason you'll see me starting the chart is to start, formulating some structure, right? But I can see, hey, 4-hour trend, right? We have a level right here, level here, right? If we go back to the daily chart and zoom in, you will notice that this was very hard to see on the daily chart, right? It's not the easiest to see. Like we can see it now because it's here, but it's very hard to see on the daily chart. So with that being said, that's another reason why over time we start going down, right? We start going down in time frames. right? So we can see here that we have very, very solid levels, right? And one thing we'll do next, right? We'll go down to the hourly, right? Let's see what we have. We'll see what we see on the hourly that we can't necessarily see on the 4 hour, right? So let's see here. I'm gonna zoom in a little more. Right, let's scoot that over a little bit. Okay. We got a level here, right? There was a lot of noise down here that I want to keep in mind, right? We held this level / trend line, right? Couldn't re-break. We're really choppy right here. I'm not going to force it, right? That's not something we'll ever do. Just because you go down in time frame doesn't mean you need to do something. We definitely have a downtrend opportunity here as well. Right, you see a rejection again, right? So again, just more perspective that we didn't have on the other time frames, right? We go down to the 30-minute, and same thing. What you'll notice is the lower the time frame is, the more I start zooming in, because I'm a day trader. The next opportunity is going to be closer to the price. So I'm not going to chart way up here or chart, way down here right now. I'm going to stay exactly where I need to stay, which is around where the price is. You can see here we're really choppy, and what I'll do, look, just to be aware, like it's very hard to see all this all the time, right? Again, bigger time frames, general overall direction, start formulating your levels, and then the smaller time frames will be more for execution and things like that. Again, they're all very important, because just because now if you were to ask me, Isaac, what time frame do you execute on most of the time? I would say, hey, I usually execute on the 5 and 15, but other times where I execute on the 30, the hourly, absolutely. It depends on the price action. Again, because you can see here, guys, look, we're on the 15-minute chart. Look how choppy this is. This was today's price action right here. That is horrendously choppy, But and someone may look at this and say, hey, oh, I need to trade here, or I need to find this opportunity here. Where if you just go on the bigger time frames, right? If we go on the hourly again, right? Zoom in, you can see like, look, dude, we have no direction. But that's why it's important to make sure you're utilizing all these different time frames. And as time goes on, you'll start to really understand more. When you start from the top and you understand that, hey, the daily chart, 4 hour chart, I'm going to find the general direction of the market right now, right? If the market is showing bearishness on the bigger time frames, I'm going to look for bearish opportunities. If the market is showing bullishness, I'm going to look for bullish opportunities, right? If the market isn't moving, right? If we're moving sideways, then that lets me know that, hey, today may be a choppy day. Look at this. No direction right here, guys. No direction on the 4 hour chart today. That lets me know, hey, there's probably going to be a lot of up and down, side to side, right? There's not a day where you can just buy and hold, right? Because what you'll do is, hey, you wake up in the morning, you go straight to the 5-minute chart. You're going to just be looking for opportunity in this. Right, you're just gonna be looking for opportunity in this, and there's nothing there. Right? I mean, that's very hard to trade. So that's why using a plethora of time. I know some people use the 1 minute as well. Some people use the weekly, the monthly. Right? I don't care what it is, but do not marry a time frame, because if you marry a time frame, you marry one particular perspective, and when you marry one particular perspective on the market, then you limit the amount of opportunity you can have to capitalize on different setups and opportunities. So in conclusion, 5-minute, 15-minute, 30-minute, hourly, 4 hour, daily, right? Bigger time frames, more solid direction, smaller time frames, more for execution, right? If the smaller time frames are showing a lot of choppiness, move up to the bigger time frames to see a more clear picture. And if the bigger time frames are showing that they're also have no direction, then 9 times out of 10, the smaller time frames will be choppy, have no direction, a lot of up and down, not a trending day. But if we can get a solid direction, whether it's a breakout or momentum play on the bigger time frames that you notice on the daily chart, on the 4 hour chart, or the hourly chart, then we could definitely go on our lower time frames, look to be more aggressive. So that's all I got today. Hope you enjoyed the video. Like, subscribe, and I will see you guys next time.